everyone, this is Kelly. Welcome back to CUMIC Weekly, where we bring you the latest Chinese steel prices and market trends every single week. If you're new here, simply hit the subscribe and like button right here to miss out on any future updates. After reaching the highest level in more than 9 months, Chinese steel prices pulled back a bit this week, with hot coil futures hovering around 3,470 RMB per ton. It is just a short-term adjustment or the beginning of a bigger trend reversal. Let's see more details. Main reasons behind this decline are the sharp drop in coal prices and the expectations of seasonally weaker downstream. Previously, thermal coal prices surged rapidly, and with the peak consumption season approaching, market whispers suggested that the Chinese government may step in to stabilize supply by encouraging coal mines to increase production and pushing coal prices down. As a result, we saw panic selling in coking coal futures, especially from bullish investors, and that pressure spread across the entire ferrous commodities sector. On the other hand, recent steel demand has remained solid. Supply pressure is still limited and overall market fundamentals have continued to improve. But here's the problem. The market is now looking ahead toward the rainy season in southern China, and that traditionally period tends to weaken construction activity and downstream steel consumption. So even though current demand is looking decent, market players are becoming cautious about what comes next. In other words, the market is struggling to find new bullish momentum at these high price levels. Next, let's examine the supply and demand side. This week, apparent demand went down by 704,000 tons. Inventory went down by 713,000 tons, and production went up by 4,000 tons. So production growth remains relatively restrained while demand is still holding up. That combination is actually supportive for the market. The overall supply-demand balance in Chinese steel market is healthy right now. Looking ahead, during this latest round of price recovery, hot metal output did not increase significantly, indicating relatively restrained supply-side pressure. On the demand side, there are still no major bearish signals, and Chinese steel exports continue to show resilience. However, most of these positive factors has already been priced in by the market. That means it's not very likely for steel prices to continue pushing significantly higher in the short term, unless we see a new bullish driver come up. So for now, the expectation is that Chinese steel market will likely show volatility within a narrow range without dramatic change. Well, what's your take on the Chinese steel market? If you enjoyed this video, don't forget to subscribe our channel and give us a thumbs up. Just hit subscribe and like buttons right here. See you next week. Bye bye.